be estimated, whether it could be estimated behind back of the SSC or not. So we discussed it. And the next question is SSC's accounting year ended on 30th September 1983. Whether his income tax assessment to be completed under the provisions of the Income Tax Act 1922 or under the Income Tax Ordinance 1984. So, as we know that the Income Tax Ordinance was introduced on the 1st day of July 1984. So, whatever income the SSC derived in the previous year, that should be taxed under the Income Tax Ordinance 1984. But the Income Tax Act 1922, which was repealed, but the necessary provisions that could also be in existence in order to enable the Income Tax Ordinance 1984 for assessing the income of the people. So in that case, it doesn't matter if the SSC could be assessed under the Income Tax Act 1922 or under the Income Tax Ordinance 1984 when the transition period is there. That means when the income actually comes from the previous year of introduction of the Income Tax Ordinance 1984. Both the acts and the ordinances could be applied according to the justification of application of the Income Tax Ordinance or Income Tax Law, whatever it is, Income Tax Act 1922. So generally what we do when a new law or new act or new ordinance is introduced, in that case, the income of the previous year, that is the income year, has to be assessed to tax under the Income Tax Ordinance 1984. That is well accepted by everybody and every time. And here the question is whether it is a retrospective effect or not. So in Income Tax Ordinance, always the provision is that the income of the income year, that is the previous year, has to be assessed as per the new rates. That means the Finance Act, which is passed in the Parliament every year. So it gives retrospective effect for the income of the previous year. And that was the question. And the case was contested in the tribunal, and the tribunal decided that it could be assessed under Section 1984, or even if somebody assesses it under the Income Tax Act 1922, doesn't matter. The income assessed would be valid. It will not go invalid. That's the question. And then question number 11, when books of accounts can be rejected. And books of accounts could be rejected. Maybe the prime reason is that whenever the SSC maintains books of accounts under a particular system of accounting, and if he changes the system during the income year, the books of accounts could be rejected. That is the prime reason. So for example, the SSC is maintaining books of accounts under the cash basis of accounting, but during the income year, he changes the system of accounting to mercantile basis, and he is maintaining books of accounts under that basis. Coming back from the cash basis of accounting. So if there is an anomaly of two methods of accounting and the joint methods he has used, or the changing of the methods from the previous one to a new one during the same income year, that will definitely enable the DCT legally to reject the books of accounts maintained by the SEC. So that is the prime reason. And other reasons could be when books of accounts could be rejected. There are, of course, many other reasons, because if the SEC actually gives you a short version of the accounts, just the gist of the heads of income and also the expenses which he incurred during the income year, without mentioning the details of the expenditure and income, and without the supporting vouchers, receipts, cash book, ledger, or the bank statement, etc. All those could lead to the rejection of the books of accounts. But primary reason, you can say that it's because of the change of accounting method or the use of mixed method during the same income year. That could be the prime reason. And then question number 12, whether entertainment allowances can be given in case of loss. So entertainment allowance or expenditure, whatever it is, this is an allowable expenditure under section 29 of the IT Ordinance 1984. But there is a limit to that. Limit to that means it is as per Rule 65. So it depends on the quantum of income. If your income is at a certain level, up to a certain amount of income, a percentage of it could be treated as entertainment allowance. And afterwards, there would be another slab. That means if you reach beyond that limit, in that case, you will have another slab for considering the entertainment expenditure or allowance. Two slabs are there, of course. And the question is whether it could be given or allowed by the Deputy Commissioner of Taxes. In case of loss, if the SEC incurs a loss, that means if it does not make any profit, or if you go to the profit and loss account and find that the SEC has got no income, rather he has got a loss. He could make income in the previous years, but this year he has not been able to make a profit. Rather, he has incurred a loss. So we have to go to the definition of income under section 2. If you look at the definition of income under section 2, you will see that income includes profit, gain, or any receipt, whatever it is in the revenue nature. And of course, this also includes loss of income, meaning that it is negative income. Loss means this is negative profit. So whenever we say that loss is negative profit, so it also includes income. And from that perspective or from that viewpoint, if you incur a loss, that does not matter whether you will be given entertainment allowance on that basis. Yes, you would be given entertainment allowance on that basis. That is a tribunal decision. So sometimes you will see that the deputy commissioners of taxes, they do not allow entertainment allowance when you don't have profit. Sorry, yes, you don't have loss, you don't have profit. So if you have no profit, or rather you have loss, in that case, the DCT does not allow the entertainment allowance while calculating the income. That means in the assessment order, he disallows the entertainment allowance claimed by you. So this is not actually fair, and the tribunal held that when the income includes negative income, that means loss, you should also allow the entertainment allowance as per legal provision. That means that as per section 29 and as per rule 65. So that would be done. Then go to the next issue. Next issue is number 13. When assessment or reassessment becomes barred by limitation of time. That is the question. Assessment completed under section 3690 year 1988-1989. The SSC filed appeal to the Commissioner of Taxes Appeals against this assessment. The Commissioner of Taxes Appeals disposed of the appeal under section 156 on 30th March 1993. The DCT did not revise the assessment pursuant to the Commissioner of Taxes Appeals order in time as stipulated in section 94(3), but went on second appeal to the tribunal against Commissioner of Taxes Appeals order. The tribunal disposed of the appeal on 5/4/1995. No stand taken by the SSC before the tribunal that as the DCT did not revise the assessment pursuant to the Commissioner of Taxes Appeals order, it has become barred by limitation. So the case is like this. The assessment was framed by the Deputy Commissioner of Taxes, maybe under section 84 or under section 83 to whatever it is. Now the SSC was aggrieved with the decision given by the Deputy Commissioner of Taxes. So the SSC preferred an appeal before the Commissioner of Taxes Appeals, because maybe it was a company case. So that's why the Commissioner of Taxes was the appropriate authority to deal with the appeal matters of companies. So the Deputy Commissioner of Taxes was supposed to revise the assessment order according to the instruction or guidance given by the Commissioner of Taxes Appeals. That means it has to be effected. It was to be effected. And the revised assessment order should have been the assessment is revised under section 83(2) or 84 by 156. That should have been written on the revised assessment order by the Deputy Commissioner of Taxes. But he did not effect the appeal order. It was not effected by him. So that's why it became barred by limitation. So when such an assessment order is barred by limitation, in that case, the city is liable to be punished. That means there was a mischief committed by the city, which was illegal. And in that case, he should have been punished under the law. Now, what he did, the city, although he did not effect the appeal order given by the Commissioner of Taxes appeals, he quickly referred an appeal to the appellate tribunal against the order given by the Commissioner of Taxes appeals. The tribunal accepted the appeal and later on heard both sides. That means the department as well as the SSC. And the tribunal gave a decision. And the decision was sent to the Deputy Commissioner of Taxes. And that was effected by the Deputy Commissioner of Taxes under section 159. So what the city had done, the city revised the assessment order according to the decisions given by the tribunal, instructions or the decisions given by the tribunal, and it was effected. The tribunal decision was effected. So in that case, the revised assessment order, which was made by the Deputy Commissioner of Taxes, was a legal one, was a valid one. Although he committed a mischief before that, but since the tribunal accepted the appeal and gave a decision on that, and it was duly effected by the Deputy Commissioner of Taxes, his mischief could not be taken into account. Rather, the revised assessment order made by the city at this point of time should be accepted to everybody. And he has been relieved of everything. And he was given a fresh lease of life. So that is the case. And you should keep it in mind that when the DCT does this, you should have actually placed the point before the tribunal. So what we were talking about is that whenever such a situation arises, the SSC or the representative office or SSC should place such a point before the tribunal that the deputy not revising the appeal order, assessment order according to the directions given by the Commissioner of Taxes Appeals under Section 156. Tribunal could have given a decision accusing the Deputy Commissioner of Taxes in that case, or should have given some measures to be adopted by the department. That means the National Board of Revenue or the Commissioner of Taxes administration to take action against the city. That point should have been raised, but unfortunately, that point was not raised by the SSC maybe, and because of that reason, the tribunal did not mention about it. In the earlier session, maybe, I'm not sure whether we could finish all the issues relating to that handout, but I believe that some of the issues could be discussed now, like would expenditure incurred on feasibility study conducted for examining proposals for technological advancement relating to the existing business be classified as a revenue expenditure where the project was abandoned without creating a new asset. That means an existing company which actually conducted a feasibility study for examining proposals for technological advancement relating to the existing business, whether this could be classified as a revenue expenditure where the project was abandoned without creating a new asset. So whether this should be treated as a revenue expenditure or that should be treated as a capital expenditure, that is the decision to be given. So this is a High Court case, and we can refer to the case named Priya Village Roadshows Limited, Delhi High Court. The decision was given by Delhi High Court, and the name of the case is Priya Village Roadshows Limited. The decision was that since the feasibility studies were conducted by the SSC for the existing business with a common administration and common fund, and the studies were abandoned without creating a new asset, the expenses were of revenue nature. So that was not a new fund, or no fund was actually given to the team for feasibility study. Rather, it was from the common administration or common fund that the study was conducted by the SSC, and that was for the existing business in order to find out the possibility or feasibility on the advancement of the existing maybe devices. So the High Court held that since the fund was expended from the same administration and same fund of the existing business, so that's why it should be of capital nature, not of should be of revenue nature, not of capital nature. And it was also found out that the project was abandoned without creating a new asset. Another, I think that was also pending. Can the expenditure incurred for purchase of second-hand medical equipment for use as spare parts for existing equipment be claimed as revenue expenditure? So here the question is, second-hand medical equipment was purchased as a spare part for existing equipment, and whether this expenditure could be claimed as revenue expenditure or not. And this was also a High Court case, and the name of the case was Dr. Ashwath N. Rao, and that was also of Karnataka High Court case. The decision was given by the Karnataka High Court, and the High Court held, since the second-hand machinery purchased by the SSC is for use as spare parts for the existing old machinery, the same had to be allowed as revenue expenditure. So this is spare part, but had it been used as a part of the machinery which was actually required for operating the machinery, and it could be added to the value of the machinery for depreciation purposes. So if the value could have been raised because of the inevitability of the part of the machinery, in that case, value would have been more and depreciation could have been charged on the total value, including the added value of the part of the machinery. Now it has been treated as a spare part. So spare part means this is maintenance expenditure. And if it is maintenance expenditure, in that case, it should be treated as a revenue expenditure. And the High Court actually held the same view because of the reason that the part of the machinery was treated as a spare part, and it was not adding the value to the existing value of the old machinery. Okay. Then another was pending here. Can expenditure incurred on operation of a dam to ensure adequate supply of water for the smelter plant owned by the SSC be allowed as revenue expenditure? So expenditure incurred on alteration of a dam to ensure adequate supply of water for the smelting plant owned by the SSC be allowed as revenue expenditure. So that is also a case of the High Court. It was a Rajasthan High Court case, and the name of the case was Hindustan Zinc Limited. The expenditure incurred by the SSC for commercial expediency relates to carrying on a business. This is related to carrying on of business. The expenditure is of such nature which a prudent businessman may occur for the purpose of his business. The operational expenses incurred by the SSE solely intended for the furtherance of the enterprise can by no means be treated as expenditure of capital nature. So this was decided by the High Court that it should be treated as revenue expenditure because this was intended for the purpose of the enterprise for carrying on the business. So this was of a very prudent nature. A prudent businessman would be doing this. And this is for adequate supply of water for another plant, which is called Smenter plant. And this definitely would add to the value of the business. That is, add to the value of the promotional purpose of the company. It will definitely create more capacity of the company in the supply of water for the smelter plant. And that's why it was part of the business, the normal business to be carried on by the SSC, and hence it was of revenue nature, not of capital nature. Another, we would not discuss that day. I believe it was also pending here. And that was, can the expenditure incurred on heart surgery of an SSC, being a lawyer by profession, be allowed as business expenditure under Section 29 by treating it as current repairs, considering heart as plant and machinery, by treating it as expenditure incurred wholly and exclusively for the purpose of business or profession. So that was related to a gentleman who was a practitioner, income tax practitioner, or who was an accountant, chartered accountant, maybe representing various SSCs before the Deputy Commissioner of Taxes. So the practitioner or the chartered accountant who used to represent SSCs before the Deputy Commissioner of Taxes suddenly fell sick and he had got heart problems, which was actually detected by the doctor. And later on, he underwent a surgery, heart surgery. And after recovery from the surgery, while his income was calculated, that means his business income or professional income, whatever it is, if it was a business center, consultancy center, in that case, business income was calculated. And in the calculation of the business income, he claimed expenditure of his heart surgery as a repair expenditure, in the sense that his heart was like a machine, and his machine was not operating well because of disease, and that's why he had to undergo a surgery. And the cost of the surgery is the repairing cost to the machinery, that is to the heart. So he claimed that expenditure, and whether that should be treated as a repair expenditure, while you can treat the heart of the person concerned to be the plant and machinery. So what the DCT would do, and what was actually decided by the High Court. So we can also refer it to a particular case called Shanti Bhushan. The name of the case is Shanti Bhushan, and the decision was given by the Delhi High Court. And the High Court said that no direct nexus between the expenses incurred by the SSC on the heart surgery and the efficiency in the professional field. Therefore, the claim for allowing the said expenditure under Section 29 is also not tenable. Hence, the heart surgery expenses shall not be allowed as a business expenditure of the SSC under the relevant section. So the High Court said that there is no direct nexus between the expenses incurred by the SSC on the heart surgery and the efficiency in the professional field. So his efficiency is not directed or has got direct relation with the expenditure incurred on the heart surgery. So if there is direct relation, in that case, it could be treated like that. But since there is no direct relation or direct nexus between the two, in that case, it could not be treated as an expenditure incurred for the business. So it was rejected, and the SSC could not win it. The city or the government won it. Okay, I believe that we have discussed some of the pending issues of the previous class, and today's handout has also been discussed in detail. I believe that you did not find any difficulty in understanding all the issues. I believe if you go through the handout well with all the questions or the issues, you will be able to understand. But conceptual understanding is very much needed for you. Some of the questions are related to the decision that the DCT gives to the SSC without any justification or without any proper assessment of the situation, or without giving the opportunity to the SSC of being heard, which violates the natural justice. If the decision of the DCT goes against the natural justice, that is also not accepted in the eye of law. Whenever it goes to the appellate joint commissioner or appellate additional commissioner or commissioner of taxes appeals or to the appellate tribunal, in that situation, the natural justice is upheld. So if natural justice is upheld, it means that the authority or the court or the tribunal has done justice to the SSC. Every opportunity has to be given to the SSC in order to defend him. So if the opportunity cannot be given to the SSC for defending himself, then the justice is not proper. Justice is not legal in the eye of law, or it cannot be stood as valid. That is the question. And the tribunal case I have mentioned before you, that is also very important for you because the decision given by the appellate authority should be effected by the Deputy Commissioner of Taxes. If it is not effected by the Deputy Commissioner of Taxes, it is a mischief committed by him. And here we have said that the tribunal accepted the appeal preferred by the department. And in that case, the issue of not effecting the appellate authority's order was not brought to the notice of the tribunal. And the tribunal also did not give a look at it. So that's why the DCT was relieved of the mischief. But generally, in such situations, DCT are not relieved of the mischiefs. So you have to keep it in mind while representing SSCs before the Deputy Commissioner of Taxes. You must bring it to the notice of the tribunal or to the higher appellate authority in any case. And we have also discussed about the estimation of the family expenditure and also the estimation of income, in which cases income should be estimated, and how to estimate the family expenditure, and what should the factors to be taken into account for estimating the expenditure. It should be practical. If, as I said to you, that if an SSC is dependent on his parents, although he has got an income earned by him, but still he does not have to spend that amount for his livelihood. So what would happen to him? The DCT, by looking at the income he's earning from his service, cannot assess him at a figure which is not very judicious. His expenditure should be estimated on the basis of the practical situation. If he is single, if he is not maintaining a large family, if he does not have expenditure for luxurious life, in that case, he does not have to incur a very huge expenditure. And as we said that he is dependent on his parents, in that case, his expenditure should be minimal. And the DCT should accept it. How he should accept it? He should not just look at the size of the income he is earning. Rather, he should go to the place of business, the place of residence of the SSC, and he should send his inspector of taxes in order to see for himself the practical livelihood of the SSC. So after getting a report from the inspector of taxes, he can assess his expenditure. And in that case, it will be justified one or a judicious one. But otherwise, it is not a judicious one. So these are the reasons, and these are the points you have to carry with you while representing the SSC before the Deputy Commissioner of Taxes. And also, we have discussed about the rejection of accounts. When rejection of accounts could take place, it's because of the method of accounting, change of method of accounting, or a mixed method of accounting you are following, or during the year you actually adopted another method of accounting. This was the prime cause, and another cause could be some other reasons, as we stated before, like the maintenance of the books of accounts not in a proper way, or just you gave a gist of the accounts, the heads of income, the heads of expenditure, etc., without any evidence or evidential support, or you did not submit any bank statement before the Deputy Commissioner of Taxes. The cash book was not there. Cross verification could not be made by the Deputy Commissioner of Taxes. So what he would do, he would definitely reject your books of accounts and come to a decision to estimate the sale as well as the income later on. Considering the first record, that means the GP that was adopted in the past by the Deputy Commissioner of Taxes. So these are the issues you have to take into account while appearing before the examination. We mentioned about the exempted income or income at reduced rate. Of course, you have to mention part A of the 6th schedule and paragraph 33. There is a mention about the incomes which are exempted. So if an income under that paragraph is mentioned in the revised return later on, then it will not be accepted by the Deputy Commissioner of Taxes. It will be taxed accordingly. So in order to derive the benefit of the exempted income, you have to put it or incorporate the income in the original return, not in the revised return. So that is also a point of consideration in your case. You have to remember in your mind to advise the SSC like that. But there are some incomes, of course, which is a pension income, of course, gratuity income, etc. Although the SSC could not show it in the original return, but later on showed it in the revised return, that should not be treated as taxed income, or that should not be assessed to tax by the Deputy Commissioner of Taxes. That's a different issue. But the exempted income under section under paragraph 33 of part A of the 6th schedule, etc., all those are to be taken into account. And these are very important points for you to remember to sit for the examination. I believe we have discussed a number of issues which can help you a little bit at least for the examination. And maybe we can again discuss some of the issues in the next class if there is any chance. And thank you very much. If you do not have any question to ask. Thank you once again for attending this session, and all the best. See you in the next class.
Thank you, sir.
Welcome.
Thank you, sir.
Welcome.